Hello and welcome to Finextra TV. I'm Hannah Wallace and we're reporting from UK FinTech Week at IFGS in London. Kindly joining me now away from the busy event is Dr. Ruth Wandhöfer. Ruth, thank you very much for taking the time out of the event to come and speak with us.
Thank you for having me, Hannah. It's a pleasure.
Really good to have you on. And I know it's been a busy event for you. You've just come off a panel session, a really interesting one, CBDCs in the context of capital markets, maybe one that people don't speak about as much. So I'm eager to hear what was covered. What were the main points from the session?
Yeah, I mean, we started by giving a bit of a background because sometimes the audience isn't too familiar with either concepts of retail or wholesale.
Yeah.
And it was really good to remind everybody that it started with a blog from the Corning in 2015 around a Fed coin. And a central bank in the US read it and suddenly told all the other central bankers they were meeting the next year on a conference in Frankfurt. And you started to see this interest of CBDC in the very early stages against the backdrop of Bitcoin and increasingly other cryptocurrencies. But then, of course, we had Libra, which everybody got a bit nervous about from a central bank perspective, which was another driver to say we need to make sure that we don't lose control of monetary policy. I did my own PhD research in 2017 on this topic, and you start to see in 2018 a frenzy of central banks thinking we need to experiment with the technology, which was very wise because it was new technology on distributed ledger. People had to start getting their head around it. And then, of course, you had China with their very large pilot that has now been going on for many years around their CBDC. So the context started many years ago more on the retail side for money that you and me spend in shops, but increasingly now in the last few years, particularly through the Ukraine crisis, as well as the countries being disconnected from the global SWIFT network, geopolitical drivers have made the wholesale space a lot more appealing. So the Atlantic Council has got an overview, and we had Josh on the panel with us today, that basically starts to see much more interest now from countries to think about a wholesale CBDC, how they can run their markets outside the US dollar hegemony, but also outside some other threats. So if they get disconnected from any system, they can still run their currencies, and they're starting to build alliances with other countries around them for certain trade corridors as well.
All right, it's a really interesting space. Thank you so much for setting the scene there, Ruth. And taking all of that into account then, do you think that digital currencies and payments can exist in harmony together? That's a big question that was covered as well, wasn't it?
Indeed, and I think there is a certain concern as we have built, particularly in Europe, US, and some of the other markets over the last few years, a very competitive payments landscape with e-money institutions and payment institutions, third-party providers that are in the value chain. There is a big question around whether CBDC would suddenly, in the retail space, crowd out all that competition that has actually developed. So we need to be mindful about this, and the central banks are quite consciously looking at payment limits so that you can't use a CBDC for any high value or even medium value transaction. But this is a sort of question around how the ecosystem that we have today will adapt to CBDCs. Equally, some people have expressed fears of narrow banking. Will suddenly all the deposit in commercial banks sort of dry out and everybody moves into CBDC? With the experiments that are going on around the world, and we have 114 countries doing various degrees of experimentation and pilots, we actually have evidence that the two-tier distribution structure and the commercial liability model has increased as opposed to decreased. So I think there is food for thought around that fear, which is maybe not that relevant as you start to implement solutions. But equally, when we think about the wholesale space, a lot of the question mark is around the cross-border piece, which would be very exciting to reduce financial stability risk and provide liquidity and data together in central bank money. But for that purpose, we need to make sure that governments also work together, not only on the technical interoperability, but also on the regulatory fungibility question, so that I can hold maybe beneficial ownership of US dollar even though I sit in the UK, which today is not the case because central bank money never leaves the country.
All right, that's really interesting. Some good advice weaved in there as well. So you've touched on it a bit already, but what do you think are sort of the main challenges then as we move forward? What do organizations and banks need to consider?
Yeah, so one area is, as I said, the competition side. So we need to make sure that CBDCs insert themselves next to e-money, next to commercial bank money and all the other technology and sort of asset-based solutions we have. Everybody today echoed that, of course, stable coins will continue to exist next to cryptocurrencies, next to commercial bank money, real-time payments that we have in many countries by now. So that's definitely one area. The other one is, of course, for the sectors in the finance industry to continue collaborating with central banks. We see the EU advancing their retail CBDC work quite rapidly. The Bank of England is currently consulting on a digital sterling, and I encourage everybody, as was expressed this morning, to actually respond to the consultation, to be part of it, and have that next iteration, the design, and then also ultimately the technology choices to be determined jointly by the market.
Right, that's interesting. Tell us a bit more about the capital markets dimension, because that's an interesting one.
Yeah, it's really one that not many people have discussed, but the true benefit really lies in the underlying technology of distributed ledger, which allows you to inbuild smart contracts. And the smart contract element of automating transactions and creating a logic, for example, a payout at a certain date or an issuance at a certain price, are really exciting for capital markets purposes, because you can suddenly have digital assets on the one side and the digital cash leg for which you need CBDCs in the capital markets context on the other side, and you can create logic within those flows. So you're starting to automate a whole world that today is not very automated and very fragmented and siloed. On top of that, you're creating the opportunity to create liquidity from markets that are today illiquid and very rarely accessible. Only very large investors can access certain large asset classes, but we want to democratize investment opportunity for everybody. So the combination of distributed ledger technology, smart contracts, and CBDC will truly give you that capital markets opportunity that people haven't really spoken enough, in my view, about.
And as we were saying before the interview, Ruth, these are all topics that need a further discussion, which we'll talk about later on. But I also want to touch on your book that's coming out soon. What's the headline? It's an interesting one.
Yeah, so I focus on redecentralization, which is really an observation that the world has become too centralized. Of course, we know the term big tech, we know those that have all our data. It is no longer necessarily governments, it is actually commercial entities. And so there starts to be a disequilibrium between the human, the digital, sort of the society as large, the public sector and the private sector. And if we look at AI, a big topic this week at the conference, if we look at payments, new types of forms of money, if we look at domestic and cross-border, if we look at data privacy, consent-based models, these are all areas that I explored in greater detail together with my friend Hazem on what it is, where is it going, and the future conclusions really look at digital horizons. Where are we going to if we don't have a digital social contract? We need to embed digital social contract principles in the design of Web 3.0 and everything else we're designing for the future of the infrastructure, so that we as humans are starting to be in control. It's about digital identity, decentralized digital identity, and it's about data ownership and control by the individual, as opposed to abdicating all of our responsibilities to third parties that ultimately just maybe exploit us as opposed to benefit us.
Yeah, it's absolutely fascinating. Like I say, we must talk later on and further down the line. But Ruth, thank you so much for sharing your insights. I urge anyone who want to learn more to go to that book as well. But I'll let you get back out there. Thank you very much.
Thank you, Hannah.